Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news China's trade surplus with the Americans grew even larger in November, even as their trade with the rest of the world slowed. Firstly, however, American job growth slowed in November, with their non-farm payrolls rising just 155,000 and well below the expected 198,000 gain. And this was also well below the 237,000 gained in October. This represents quite a quick slowing in the pace of their labour market. The unemployment rate was unchanged, as was their low participation rate, but their underemployment rate rose. Monthly wages also increased, but less than forecast, but are still up 3.1%, so it's likely that the US Fed will hike on December the 21st, and that will still go ahead. Wall Street didn't take kindly to the data or its indications of the economic track and ended up down 2.3% on Friday and down 3.8% for the week. US wholesale trade sales fell in October from the prior month, while inventories rose, more signs of an overall slowing economy. And part of that is the depressing effect the trade wars are having. But so far, there is not a lot of sign of these economic impacts are flowing through to consumer sentiment, which seems to be holding at good levels. US consumer credit data for October shows an unexpectedly large jump, almost twice what was expected. Much of that increase was due to a 10.8% leap in revolving credit, the category that includes credit cards. Meanwhile, in Canada, they also released jobs data overnight for November, and that was impressively positive. Employment rose much more than expected, up 94,000, and almost all of that was for full-time gains, up 89,900. In China, they released their November CPI data earlier today, and that shows prices moderating, coming in up 2.2% from the same month a year ago, and a drop from 2.5% in October. Their producer prices are falling more significantly, up only 2.7% in November, compared with a rise of 3.3% in October and 5.3% in November 2017. That is a continuation of a slowdown that has been going on since June, and the lowest year-on-year increase since late 2016. And China's exports slowed unexpectedly last month, growing at a slow-for-them rate of 5.4% as demand weakened in most markets, except in the US, where a strong growth put China on track to post another record trade surplus with them. Their surplus for the month with the Americans totaled $35.5 billion and a new record monthly high. China's exports to the US grew 9.7% year-on-year to $46 billion, while their imports to the US dropped 25% to $11 billion, no doubt as traders continue to rush to beat the new tariffs. The same data shows New Zealand with a very healthy trade surplus with China, where we bought only a bit over half of the value that we exported to them. US Treasury 10-year yield will start the week at 2.86% after a big 15 basis points drop last week. Their 210 curve is higher at just under 14 basis points, although I recall it was 20 basis points this time last week. But their 2.5 curve actually inverted to be negative. Traders noticed that. Gold is higher, benefiting from all this uncertainty and risk retreat. It rose $28 from this time last week to $1,248 an ounce, and that's its highest since July 2018. US oil prices firmed on news OPEC and Russia actually did strike a deal to cut output. US prices rose about $1 to just under $52.50 a barrel, while the Brent benchmark is now just on $61.50 a barrel. And the Kiwi dollar is starting the week marginally firmer at 68.6 US cents. On the cross rates, we're also up at 95.3 Aussie cents and firmer at 60.3 euro cents. That puts the TWI at 73.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.